All right. Happy Friday, everybody. Joe and I are back with our weekly market update. Okay. All right. The Fed cut Fed funds rate on Wednesday, Joe, and mortgage rates have been going back up. People are asking, why is that? Well, a couple things is one is the Fed cuts the Fed funds rate. So your HELOC rate, Joe, down. Your money market account, they have all that cash sitting in that makes 4.5% yield down. Mortgage rates are up because they've already made their move down. And we're going to just share the screen real quick. Okay. And you got it right. You see it, buddy?
Not yet. There it is.
Okay.
Yep,
So
got it.
right here in the top corner, this is where we are today. We've started to move the bond market. This is the bond market. So back in July, right around here, the Fed did not cut rates in July. And so that basically meant that they were going to cut rates in September. Everybody knew it. And so what did mortgage rates do? They started to move lower in the months leading up to the Fed cut. So the mortgage rates already made their move. It's already priced in. Everything's already happening. And right now you're just seeing some volatility. It's bouncing around and mortgage rates are ticking up. If you go all the way to the left side of the screen, this is a 1-year chart. This is back kind of in September of last year. This was right around when the Fed cut, and you can see, holy smokes, the bond market cratered, rates shot right back up. Now, I don't necessarily think this is going to happen again. I could be wrong, but remember, when the Fed cuts rates, it's the Fed funds rates. It's your mortgage rate, or sorry, it's your car loans, your money market accounts, your HELOCs, your bridge loans. Mortgage rates, they're not on the same highway. They may be heading in the same direction, but they're going a different route, a different road, and so it's not going to be apples to apples. Is that, Joe? Do you have anything else
Yeah.
to chime in
And I
about?
was going to say, and I think that's what's confusing to just the general public is they look at rates as just one bucket,
Yes.
and rates are in different buckets. You got long-term mortgage rates, you got credit card and HELOCs, you have, auto loans. So you have a bunch of different rates, just like there's two ways to do FICO scores, which is super, super confusing to the public. One of the FICO scores goes into the 900s. The ones that we use goes into the mid 800s max. So they all have differences, and it's super confusing to the public. So I get it. And when I hop in the car, the radio is saying rates are
Oh,
down. Call American Finance.
oh my
Blah blah
God.
blah blah blah. And we had our
Gee.
8-hour CE class yesterday, and even the instructor's like, "Well, prime went down, so does that mean the rates are down?" And everybody just laughs. Like,
Yeah.
no, rates went up. Now, if we think the Fed is going to raise the rates and then they lower them, then rates will get better automatically. But if the foresight is the rates are going to go down, those are already baked in. So when they do go down, unless they go down more than expected, that it goes up because those are already baked in and the market's responding to it.
Exactly. And part of the thing is, in Powell, in his speech on Wednesday, hinted, he's like, I think there might be a few more cuts coming this year. I think that was actually already baked in a little bit too. But then he goes, maybe one cut next year. Now, of course, whatever the heck they say in September, who knows what they're going to do next year, but that's how the market works. Does it make
We're
sense?
hearing two possible cuts more this year. We were thinking maybe one in December, so that'd be
Yeah.
great if we
Yeah,
got two.
we'll
Yeah.
see what happens. I think the trend is going to be lower, but gotta remember, more it's not, hey, Fed cuts rates, mortgage rates are down the next day. Does
Yep.
not work like that. Okay.
Yep.
So,
Yep.
and if you've been watching these videos for a couple of years, we've been pretty good about that. So, anyways,
We've been hitting that home. We've been
we've
hitting
been
it
hitting
home.
that hard.
Yeah.
Real fast, a couple macro things. Some home builder weakness. Lennar Homes reported their quarterly earnings. They missed estimates. That stock's down a little bit. There is a whisper number for the new conforming loan limit for 2026. Still won't come out for another couple months, but the whisper number is 819,000. And we'll go over what that means in more detail at the end of the year, but that could be the new conforming limit. And we learned at least I learned yesterday, we have brand new appraisal forms coming out. Brand new way of not doing appraisals.
Or lack of forms, just
Right.
one general template, which doesn't really matter to the general public, but it will make our lives in the lending and real estate and
Yes.
title world a lot easier.
And
Yep.
if you're a real estate agent out there, you're going to see a much different form. It's going to be much more concise. Everything's going to be kind of like, I guess, summarized on that first page, and then you'll have the rest of the report. So good news
Yep.
on the appraisal. Apparently, they haven't updated the appraisal form in over 20 years.
Sounds about right because I've been in it 22 years and I think it's been the same.
That's, oh my God, this industry just moves like just a snail's
Um,
pace. All right, Joe.
all
Lots to
right.
cover there. I'll let you. I'm going to toss it over to you for rates, buddy.
Yeah, go ahead and put rates up
You know
if
what?
you
I
got
just
them.
realized my rate graphic. I never did. I did, but you
Oh,
go
no
ahead
worries.
and fire them
So
off.
3% down, home ready, home possible. So if you're under the 80% AMI, that's area and median income in the area, you can get 5.875 today. And again, these are not quotes, these are averages, assuming good credit and a 500K loan amount. 5% down, first time home buyer, under 100% of the AMI is at 599. And if you're over the AMI or if you're not a first time home buyer, it's at 6%. So they're all basically right there within an eighth of a point.
Yep.
If you're doing an investment purchase with 20% down, you're at 6.625. With 25% down, you're at 6.375.
Okay.
Those have pretty much stayed the same the last few weeks.
Yeah, I was gonna say, they dipped a little bit at the beginning of this week, kind of
Yep.
leading into the Fed meeting on Wednesday, and then they've ticked up
Right.
since then. So
Yep. Yep. VA, if you're a veteran, you can get 5.625 today.
that's the same as okay.
If you're an FHA, you can get 5.375 today. So VA, you can do 0 down. FHA, you can do 3.5% down. If you're a rate and term refinance on a primary residence going to 70% combined loan to value, you're at 6% today. If you want to go to 80, it only goes up an eighth of a point to 6.125. So you can get rid of a lot of debt if you want to do the cash out. We'll go over those rates now. Cash out refi on a primary to 70% is at 6.125.
Yeah.
If you go to 80%, it jumps up to 6.5. Cash out refi on an investment, they max you out at 75% loan to value. That's at 6.625, or 70%, you can go down to 6.375. If you're doing a 15-year fixed purchase with 20% down, you can get it 5.375 today. That's gone up a scotch since last week, but still really good.
Point. Not bad. Not bad.
Yeah. Jumbo loan with 20% down is at 6.375 today. And a couple holidays here. Well, first, if you have a VA loan and you're over 6.5%, you need to call us and do a VA IRL, which is an interest rate reduction loan refinance. It's a streamlined refinance, no appraisal, no income docs.
Yep.
So it's super easy. You can drop a point. So if 5.625 does a significant improvement for you, give us a call. One of my sweet spots, happy National Butterscotch Day. I've always been a butterscotch fan. Murph,
you know what? I'm not sure I knew that about you in our 35 years of knowing butterscotch.
Yeah, I'm a butterscotch guy. I think that's from my grandma. Yeah.
Okay.
Yep.
All right.
Great. And happy 4 p.m. finish day. So apparently it's a national holiday to get off work an hour early. So everybody enjoy the weekend.
Where do you get
Hey, those were the top two. I mean, the other two I couldn't even pronounce.
I don't even want to see what the other ones were. What about birthdays? What do you got for birthdays?
I got one good birthday for you. Happy 51st birthday for Jimmy Fallon.
Okay. He hasn't been canceled yet, so he's still on.
He's not been canceled yet. He's 51. I didn't know he was.
I didn't know he was 51 yet.
Six years older than us.
There's another birthday earlier this week that you would have loved. It wasn't today. It was early. I can't remember. So sorry. Anyways, but by the way,
that's a good story.
Real quick, our Buffalo bet last night sucked.
I think I'm 0 for 3 on Thursdays in the football picks.
I got to follow you on our NFL pick. It was brutal. That's brutal.
Yeah.
All right.
Yeah.
Well, anyways, call us if you guys have questions about this Fed funds rate and mortgage rates and how this all works. We'd be happy to answer any more questions. But hopefully, we did a good job of explaining that today, and it made a little bit of sense. So
give us a call anytime or stop by. We're at 2900 South College, Suite 3A, Waypoint Bank Building. Thanks for watching.
Boom.